Geopolitical issues, stock market, cryptocurrency roller coaster, labor shortage, supply demand shortage, housing shortage, interest rate rising, inflation, housing bubble, what's going on in the housing market and what's going to impact you as a home buyer, seller, or a homeowner. Hi, this is Ritu Desai with Seams in Property, your Maryland, Virginia, and DC Realtor, and a longtime blogger to educate you on what the current market status is and what it means to you as a DMV resident. So let's talk in depth about the numerous challenges, questions I hear every day, and let's make sense out of it. Number one is the foreclosures. I don't think a week goes by or somebody asking me, hey, Ritu, can you find me the deal on distressed sales, short sales, or foreclosures? Forget about pandemic, even pre-pandemic, we were not able to find those deals in the local area. The reason is because we have a high income, we have a very low unemployment rate, and people can afford to carry their mortgages. So our distressed sales are barely a few percentage. And I was looking up some numbers. When financial market crashed, we had over 2 million distressed sale in the country. Currently, there's only 38,000 distressed sale in the country. So you can comprehend whether there are deals out there in the foreclosures or distressed sale or not. Second big monster question I get is the housing bubble. Housing bubble, I don't think there is a day goes by on a DM or a social media or somewhere I run into people and say, when the things will slow down, Ritu, and is this a housing bubble? And if you go back to reading my blogs from even 2012, I have written very strongly about our DMV area and why I don't think we are in housing bubble zone or area. Number one is the unemployment. If you look up our area, number of the employers that are in the Fortune 500 companies, these startups, the federal government, and we have a high paying job. So there is a lot of bandwidth in our area, financial tolerance to be able to carry mortgages, even if we have some geopolitical stress or inflation kicks in. We are not as expensive as the housing in the San Francisco, New York, Seattle market. So we have a long way to go, which is also a good news for my homeowners in the DMV area. Second reason is because we have a new norm, new lifestyle, I call it. Pandemic did bring us a lot of different perspective in our life. We want that work-life balance, and the employers have embraced that. Even my own family, where many of them work in the federal government with clearance, they have gotten the hybrid option. So I think that new norm is here to stay. So the suburban housing demand, especially out in Loudoun, Prince William County, it's going to be much higher than being in the in the Washington, D.C. area. Third reason, institutional investors. Why am I bringing it? Because these are the investors I follow closely and read about them. They're pumping their portfolio with their real estate investment. What it means for you, like Blackstone last year took over a lot of chunk from Zillow when they were selling their iBuyer portfolio. It means that we're going to continue to see the shortage in the housing. These institutional investors don't purchase the properties in their portfolio for the short run. So we are here in for the short housing demand. So that's going to be here. And also, I always tell people that inflation, if that's the biggest concern for you, what's the best bet against inflation? Real estate or commodities like gold. So if you don't want to stock up on gold, real estate is your good best choice. So considering the overall, wrapping it up, that we are not in the housing market in the DMV area, you need to be confident and have the consumer confidence to purchase a portfolio, whether it's for personal property or for investment in the area. Now let's talk about the third big question I always receive is the interest rate. With the rising interest rate, Ritu, do you think we're gonna see a slowdown? What's gonna happen? To me, I always smile back and tell people that, you know what, it's a weird human psychology. When there is a change, we always sort of pull back. And then when you feel like this is a new normal, we follow the herd again. So same thing goes with my interest rate. When the interest rate started rising, some of my buyers said, I'm going to sit on the fence. Maybe things will improve or market will slow down. But then when the markets do not shift or nothing changes, they jump back on it. Now they missed out on what they should have purchased 6 months back. So if you are comfortable with your monthly mortgage as of today, that's what's going to stay with you for 30-year fix, if you do opt for that loan, then go for it. Why pause? Especially if you are a first-time home buyer or need to move up into a larger home or downsizing. If you are an investor and you're not sure about their investment choice, then maybe pause. So interest rate, I don't think makes a huge impact on a personal property portfolio. Last but not the least question I receive is the shortage of the housing. When is the shortage going to go away, Ritu? To them, I would say that, again, tying back to my investor that I've been following, quite a few of them, their portfolio is being pumped up with a lot of these investment. I'm not just talking about apartment complexes. These guys also buying townhouses and single-family homes in our area. And also, if you take into perspective new construction housing, land cannot be grown. So we have to build the housing, and new construction, it takes anywhere between 6 months to a year and a half for these builders to build your home, and the price and the premium you'll pay. So the resale home premium will always be more attractive to a home buyer who does not want to wait for that period and pay the premium to our new construction. So overall, I don't think the housing shortage is going to be solved in overnight, a year from now, or any time in a short period. We are DMV area. We have a lot of people relocating. Cost of living, even though it's high for us, people are still willing to go extra and spend that money to be a homeowner. So to wrap up all of my above concerns and questions, if you are in a market for a long term, remember, real estate was never a liquid asset. If you are in for a long run, go for it. Build your first home, or don't be a renter, because that's not going to give you the tax benefits or the pride of home ownership. If you have any questions or would like to discuss further about the housing market in the DMV area, let's talk. My number is 703-625-4949. And as always, I'm grateful for you to watching this video.